Hey everyone, I'm Daniel Rondberg. I want to welcome you to this video. Today I'm going to be doing my reaction to Kris Krohn's whole life insurance video. It says how to use cash values of whole life insurance. Kris Krohn is a very well-respected real estate investor and entrepreneur, and he's making a video about life insurance, so I'm excited to see what he has to say. He's a very wealthy person. He's very smart. He's definitely out hustling. He's working hard, and I want to see what his view is on life insurance. So let's dive in and see what Kris has to say.
What's up, Ninja? Kris Krohn here, and recently I got a question. Someone said, hey, how do I actually leverage the cash value in my life insurance policy? I use it to fund my real estate investments. So today I'm going to show you the ins and outs of how you tap into cash value to use it purposefully.
'Cause we're gonna be legends. What we're doing here, legendary.
I like his intro. His intro is incredible. He's got videos of him at events, jumping up and down with people. He's ziplining across the world. His house looks like a mansion. It looks incredible.
Whole life insurance has a death benefit and a living benefit, which means every month that you write that check, a little bit goes towards the death benefit. The rest of it goes towards building up cash value that you can access. What I love about whole life insurance is that I'm generally earning dividends of 5% on my money when it's sitting in there, and sometimes more than that. It's not gonna get me rich, but I feel way more responsible than letting my money sit in a bank.
I like what he's saying so far about feeling more responsible than a bank. I like what he's saying about feeling purposeful. I don't know that I agree with the whole earn 5% thing. Like, I own whole life insurance. I help people with whole life insurance. I don't think you can really say it earns 5%. I mean, technically the cash value earns 5% in dividends or 6 or whatever the dividend's paying, but there are like fees inside life insurance. I think that's important to let people know. Like, you're not earning the full 5% because you have fees and policy charges, and not all your money's going to work for you. So just something I want to point out that I think about when I think about whole life insurance, but maybe he's going somewhere different. Maybe he's got a different type of policy or something else. So I'm going to see what he has to say. I want to learn more about what he's saying about this.
Second thing is my money's untouchable when it's in there, which means it is the only unlitigatable policy on the planet. It's the only place you can put money where no one can touch it. Government can't touch it. No one else can touch it either. So third, most importantly, is that I get all these awesome tax benefits, which means I get to grow my money tax-free in there. So when I pull it out, here's how you do it. You call up the custodian, the person that you have the account with. For my guy, just shoot him a text. I'm like, hey, send me a check for 30 grand, send me a check for 200 grand, whatever it is. And he'll generally say one of two things. He'll either say, Kris, would you like me to send it in snail mail and take 10 days? Or do you want me to have it wired to you? It's up to you how you want to do it. It's not the most convenient bank because I make a phone call and then the money gets sent to me, but that works just fine for me.
So he says the only untouchable policy in the world. I think there's other things you can utilize, like annuities that are also policies that have similar protections to life insurance. Now, I'm not an attorney and it goes state by state, so it just depends. And I think there's even rules on like how long the money's been sitting in there before it becomes, in his words, untouchable. But I think he's onto something there. I mean, he's trying to explain that generally assets in life insurance are pretty well protected from a lot of different things, and that you can have some additional protections. I think basically what he's doing is comparing it to like the bank, where you don't have those same protections. So I think in a lot of senses he's correct. But again, just to be careful and clear, it's state specific and there's rules.
And now I can use it to support a business, start a business, invest in real estate, and do real smart maneuvers. I came out of 5%. So now I'm looking to do, like in my real estate, earn 20%, or maybe it's 25%. When I'm done with my real estate and I pull it back out, guess what I'm gonna do? Whew, I'm gonna pay my policy right back, fill it right back up. And now I've built a shelter because all my money sitting in there is growing tax-free again. Isn't that awesome? It's fantastic.
He's talking about the really good banking principles. So Nelson R. Nash, who's like the pioneer of infinite banking, which is what he's talking about, says, you never steal from your bank. So he's talking about it, comparing it to like a checking account. I always think of it like that too. When you have money get paid, goes in your checking account, goes out for expenses and different things you buy or invest in, and then you get paid again, it comes back into the bank. He's kind of operating under the same principles, which is put the money in, pull it out, put it back in. That's crucial. A lot of people, I think, get caught up with whole life insurance, like, wait, I don't have to pay it back? Well, yes, but if it's an advantage to pay it back, why wouldn't you do that? So I think that he is onto a good point there.
Let me give you kind of a real world example. So I recently did a deal and I short term needed to show $100,000. So in my policy, I texted my buddy Garen and I said, buddy, I need 100 grand. 2 days later, the money was sitting there. I used it. And for this situation, I just needed to prove some collateral. The collateral was to basically show good faith on another project that I was doing. Once they saw that I was 100,000 liquid in the bank versus my policy, they gave me the thumbs up. I took the 100 grand. I popped it right back in my account. But most insurance carriers, and more importantly, most insurance agents, they don't know how to set up these policies the right way. If you want to be able to put money in and take it out, the insurance company will pay very low commission on that. So your insurance buddy, unfortunately, is usually incentivized to say, let's do the policy this way, and then in maybe 4 or 5 years or 8 years, you can pull some money out of it because they really don't want you to touch it. That's what allows them to have a much higher commission. In the end, it's important for you to access your money. A whole life insurance policy is a really smart, better than a normal bank account.
There's different structures and designs with whole life insurance, and really, the liquidity of the policy and the agent's commission do move generally like a teeter-totter. Typically, the more liquid the policy is earlier, the less the agent's going to make in commission, which is why agents are incentivized for them to try to structure it where, yes, you have less liquidity early up front. However, the caveat to that is important to distinguish because I always try to get really clear with my clients on what their intent is. If it's liquidity, then boom, we try to max it out for the most liquidity they can get. But they have to understand that long term on those funds, it'll pay less dividends. And so that's important too, because there's that other piece that a lot of agents online miss. And I feel like a lot of agents are trying to race to the bottom on YouTube or on TikTok or somewhere where they're saying, hey, we create the most liquid policies and we take the least commission. Now, I'm not saying that's what Kris is doing here at all. Kris is talking about using this money that he likes to invest in real estate. He has to have liquidity. So he has to bring that point up to people that are watching him because he doesn't want people to get in a situation where they go, Kris, I watched your video, but I don't have liquidity on my money. What's going on? He's trying to set it up for the right purpose. He's purpose driven, which is great. But again, it depends on what your goal is. If you're not somebody who can go take money and make 20, 25% like Kris, or you're not an entrepreneur, then maybe the back end dividends are going to be important to you because they are significant. I mean, when you look at policy designs, yes, you could have 90 or 100% liquidity up front, have your agent take a less commission. He's happy because he's still, or she's happy because they're still helping you. But then your dividends are going to be significantly less. Whereas if you give up some of that liquidity in the beginning because you may not need all of it, then the dividends on the policy on the back end are really powerful. So it depends on who you are and what you're going to use the money for and where your priorities are and where your strengths are. If you're not somebody who can go and do that like Kris, then maybe you're better off with the long-term dividends. I don't know. That's not for me to say. I just think that's an important point to raise.
And I use mine as a bank account to support all of my business, all of my investments. And you know what? That's also where I put my sleep well at night money. So if there was a rainy day, if something bad were to happen, that's where I store that money that I can pull out and actually access it super, super easy.
Okay, I like that a lot. First of all, I use that slogan my dad came up with, but he taught it to me years ago, sleep well at night money. We call it swan money. That's something fun that just resonates with me because I like that. I use that term. But I also like the idea of keeping whole life insurance as your sleep well at night money, your savings money, the money you just got to keep safe and around for what you might need it for. Not all of it, obviously, because yeah, you can't get it like a bank account. You might keep a lot of money at the bank just because I think you got to have access to it. But I also keep a lot of money in whole life insurance because my assessment of it is I like it better than my bank account because it has those other benefits.
If you're thinking about starting a policy, what you really need to do, and even if you have an old policy and they don't let you take very much of it out, over the last decade, I've only found 3 people I implicitly trust to set up and design the right policy to support my investing. I got a list of them in the link below.
Kris is saying that he's got a list of agents that you can reference that he trusts personally to help with this. He's got some good resources that can help people set up and design policies, and they're on the top 3 list of the people he trusts implicitly. So
it'll direct you to my most trusted group that will actually set that up for you, and they'll do a fantastic job doing it. And then you can be like me, smarter, more sophisticated, saving your money, earning greater returns on your money, and protecting your money. All the things that a smart investor and a smart human being is actually looking for. Best wishes.
So I'm going to skip the call to action here part at the end. So overall, I have a lot of things I agree with Kris's assessment. You know, again, one of the challenges with making a good YouTube video is you got to keep people's attention and you got to have a lot of valuable content. But I think that, you know, there's a lot of things you want to distinguish in there. I think it's good that he's offering someone that he trusts as an agent you could talk to. I think it is really important to get clear on what these policies can do for you and what you want them to do for you. They're not replacements for bank accounts. They're not a bank account. But they are a place where you can store money and utilize it. And so for me personally, yes, I enjoy those benefits for my own life. I enjoy those benefits for my own personal investing and my own business. And I try to share those benefits with people when it's appropriate. So I think it does have a lot of great things. I think Kris did a good job of breaking this down. And I think that there's a couple things that I would add to it from my own point of view, my own opinion. Overall, I think they did a really good job with this video. And I think he's really genuinely, I think his intent is to try to help serve people at a high level. So I like what he's doing. If you like this video and you want to see more reaction videos, leave them in the comments below. Please like the video and please take a minute to subscribe. I really want to be able to reach more people, and that helps me out tremendously. If you enjoyed the video and got something of value from it, I appreciate that. I look forward to connecting with you. Please reach out. People have been reaching out all over the place, and it's been so fun to connect with my subscribers. Thanks so much for watching this video. I'll see you in the next one.